So let's start out with Bitcoin. Bitcoin remains in this channel. Notice the channel here, guys. Now, notice Bitcoin is getting a little bit of an up move today. All right, that's a weak dollar response. That's normal. All right, now my issue here is that, number one, we have a defined major top at 25,200 to 300. So that's your line in the sand. As long as that holds, you have to be on the negative side of Bitcoin. It hit resistance. It's pulling back off resistance. The other issue here is, take a look at this. Basically, we had the 4 down days in a row, 1, 2, 3, 4, and then what's going on here? That's a bear flag, an in spirit of bear flag starting to form. So when I see this pattern, what it tells me is that probabilities are now favoring downside on Bitcoin. Even if we get a little bit of a bounce here and there, as long as this pattern holds, essentially as long as price stays inside of this channel, you have to start thinking that Bitcoin has downside. Where's downside going to take you? The low end of the channel would be your first target. That's around 22,400. If that breaks, which, by the way, upsloping channels, if you look at 1 million upsloping channels, you'll see about 80% to 90% of them eventually break to the downside. Could be a month from now, could be 6 months, doesn't matter. The point is, an upsloping trend line, 80 to 90% of the time will break to the downside. My guess is the break to the downside happens within 2 months, if not within a 1 month period. Okay, so that's your Bitcoin analysis. Again, Bitcoin right now chopping sideways. Again, reminder, that is a classic in spirit of bear flag. Bear flag by the name indicates that the probabilities signal downside coming. All right, let's go on to some other charts. This is the dollar. All right, so basically what I want to do is look at this, right? And what we can clearly see here on the US dollar chart is that we had a down day, a small up day, and then another down day today. If we flip over to the SPY chart here, what we can see is that we had the down day and then a weak up day when the dollar fell. Notice how we had a red candle here. Look at this. We opened here, and by the end of the day, even with a fall in the dollar a couple days ago, we did not have much of an up day. Yesterday, same thing. The dollar was a little stronger. The markets tried to fight, and they fell back down. Today, again, the dollar is sinking, and we're seeing the markets barely catching a bid. In fact, the S&P just went negative as I'm saying this. Now, the reason why this is important is that over the past years, and I mean, I'm literally talking years, the market has had an inverse relationship with the dollar. When the dollar falls, the markets rip higher. The fact that we're not seeing that here, to me, that's a warning sign of issues to come. You guys know I continue to hold generally a fair amount of shorts on the market, and I continue to look for downside. Doesn't mean every day is going to be down. We're going to get bounce days. But ultimately, again, this is a market that is in troubled waters. We're basically entering a phase now where, yes, inflation's coming down, but not enough to get the Fed to step on the sidelines, let alone cut rates, and that is a major problem. All right, so let's go into some other charts here as we get through here on the charts. All right, I still believe gold will be the best performing asset. All right, I talked to you guys via a post on Twitter recently about where I expect the chart of the S&P to go. All right, over the next 12 to 18 months, I'm anticipating a drop on the S&P 500, another 22% to downside to this long-term trend. Now, you'll have big bounces along the way. Don't go and misconstrue what I'm saying. I'm not saying that we're going straight there in the next 3 weeks. I'm saying that over the next 12 to 18 months, we are going to meander down to this level down here. All right, and again, that's right around 3,000 on the S&P 500. So what that means is that S&P is going to underperform. If the S&P is underperforming, you better believe that Bitcoin is going to struggle as well. All right, yes, I do believe there'll be a pivot point where it becomes more like gold. That's not yet. We still have to wait for that to happen. Probably coincides with regulation and bigger money starting to feel comfortable getting in the crypto space. But bottom line is, if we head down here, assets across the board are going to go down. I do think gold would gain traction, though. Gold is a safety asset. It's also an inverse dollar play. The dollar at some point, and we're starting to see it now, starting to weaken, and the markets are not rallying. There's going to be a point where the dollar is falling, and this is the scariest of all. The dollar falls, and the markets fall too. That's the worst case scenario. That's telling you we're in a very bad recession when that's happening. And even with lower rates, and this is the key, even with lower rates, what that's telling you is that the market doesn't believe that the recession will end, meaning the Fed has lost control. Let's go to gold. Let's talk a little bit about gold. Gold continues to bounce. I call this to a T. All right. So when we were number one, you guys know I've been bullish on gold for a long time. All right. But there was a point when we were up here on the chart of gold where I said to you guys, listen, I'm not advocating buying gold up here. Let it pull back. It's run too far. It's run too fast. No chart goes straight up, at least on a healthy basis, and no chart goes straight down on a healthy basis. But the bottom line is, look at the retrace and look at the level. Pivot high, choppy breakout, retrace to the scene of the crime. That was your buying opportunity right there. I picked up some GDX. I picked up some other things out there. Again, if you're a member of InTheMoneyStocks.com, you know exactly what I picked up over the last week or so. As a trader, you have to remember that you're going to be wrong. The retail crowd and a lot of it, and listen, I was like this in the beginning. And listen, for years I was like this, where I would be like, oh, that's a great spot on this trade, so, or on this stock or on this crypto or whatever. So I'm going to go put all the money I think I'm going to need into this trade at that point. And ultimately, I'd find out that I was wrong quite a few times. And the key was I didn't have the money because I put too much in. I didn't have enough money to maneuver and trade around the position. Okay? So again, the key is that by doing this, folks, by dollar cost averaging, by starting small, by really it's a mentality change. Stop your mind from thinking it's a no-brainer winner. And every time you take a position, assume you might be wrong. And by assuming you might be wrong, you're not going to put a ton of money in, I guarantee it. And that's going to change your whole ability to maximize profit by trading. I became a 10 times more profitable trader when I made that mentality switch. And so it's really a mindset. It's not the cocky mindset of, oh, I just want to double, triple, quadruple my account in a month. It's the mindset of, I may be wrong. I've been burned many times. So let me start small. And that actually increases your overall profitability. Very cool stuff, guys.